Welcome to the Daily Update. This is being prepared Thursday, March 3rd, where we'll look at the action in the market today and then see how things look for Friday, March 4th. There is a lot happening right now, and I'm going to break off and do just something a little bit different right now. Those of you that watch these videos, of course, I teach classes on the stock market, and I do daily, weekly, and monthly videos. There's a lot more things that I haven't rolled out or told people publicly that I do as far as the program that I have. But my background is also as a teacher, and I have a degree in history. One of my degrees is in political science. I've taught a lot of economics. I study that more from the stock market perspective. Well, I have a real interest in history. I'm not only a teacher, but I'm an enthusiast when it comes to that. And I've always found foreign policy and the geopolitical events to be very interesting to follow. Well, what I wanted to do is just start off with a bit of a map. It's not a bit of a map, it is a map of Ukraine. Now, please, if you are from Ukraine or if you are a Ukrainian history expert, and I make mistakes in this because I'm coming from Western eyes as I look at this and talk about this. I'm just trying to give a broad overview of what's happening right now because things are escalating right now. Up here, this is Belarus, and you can't see, but Minsk, Belarus is right now where I reside. And so I keep an eye on things right here because Belarus has joined Russia as far as supporting what they're doing. So a lot of the sanctions that are being hit on Russia are also hitting Belarus. But back in 2014, after the Olympics, Russia did invade Ukraine. And so there are a lot of resistance fighters that have been fighting over here in this area since about 2014. Well, a lot of the fighting back and things that you've heard about have been coming from this area. Eventually, it is thought that Kiev or Kiev, however you want to say it, and I'm sure I butcher it with my Western way of talking, this is the capital right here. And here's good old Chernobyl too. But a lot of these troops that are in that caravan, from what I understand, they're just kind of waiting around up here and they're not really being attacked. Nobody's really doing anything to try to stop them at this point. Well, back in 2014, way down here at the bottom in Crimea, this is what went back into being part of Russia. And if you see this, this strategically makes sense to Russia because this is the Black Sea right here. And from the Black Sea, you can get to the Mediterranean Sea. And from the Mediterranean Sea, you can get to the Atlantic Ocean instead of only being able to go way up north where it's very cold and doesn't have a strategic access by water that this area down here does either. But what we're starting to hear is that a lot of these other areas, Odessa, Kherson, these weren't necessarily heavily defended. They didn't have resistance forces in these areas. And the Russian troops coming up from the south and by ships, they're starting to overtake these areas down here. And so there's a lot of problems now starting to develop in southern Ukraine. There have been lots of problems in eastern Ukraine, and you have a lot of people that are really moving west because it's considered to be safer. Now, this is the part where somebody that really knows Ukrainian history could take me to task. How I've always tried to explain this is you could almost draw a line down the middle of Ukraine, very loose line, okay, where typically this is the part over here that Putin seemed to really want back. And there are some people that live in Ukraine that would like that, but we're seeing them really fight back as far as that is concerned. Western Ukraine, this is the side that really is more pro-Western. This is the part that really would like to be part of the EU, and I understand that they're on the fast track to becoming part of the EU. Whether it's going to work out that way or not, we don't really know. And this is the part that is kind of more under scrutiny as far as being part of NATO. But you have Poland right here, and there's a whole lot of US troops right along here. Poland is a NATO member. You have Hungary right here. Hungary is a NATO member. So now the question is Putin going to take over Moldova? Is he going to go into Romania? This is a lot of the unsettledness that has been going on and continues to go on. And I heard a report where Putin had met with the Macron in France, and he said, the worst is yet to come, more or less. So this is feeding over into the markets, because do you want to put a lot of money out there and put it in harm's way, so to speak, and then have prices decline and just see a large part of your investment go away? Where at the same time, do you want to go short in the market right now where something might happen? Some positive developments could really shoot things higher. And so for the most part, the markets have been going sideways currently. Now, another thing, and I don't have a map of this, this is part of the talks that are going on in Vienna with Iran. I'm understanding that they're thinking of really lessening a lot of the sanctions against the leaders of Iran, against some of the terrorists in Iran, against the Republican Guard, which goes completely against US policy for the last, well, kind of since 1979, when they overtook the embassy in Tehran. And that could be some real concessions. And there's even a report out there in a non-US source, and that's sometimes what you have to look at, because there's a distract and deflect kind of a thing going on. We're being distracted with Ukraine, as we should be focused on this, but there's other things that are happening too that don't always get noticed and aren't as sexy or as cool or as cut and dry to talk about, like the talks going on in Vienna, and those kind of slide under the radar. And it seems like a lot of the real harsh things that we did to Iran before, the US negotiator over there is really willing to give those up. And that could add a lot to destabilize an already destabilized Middle East, which had been doing better. A lot of the foreign policy that came out before the current administration really helped to strengthen some of the ties in the Middle East. Well, that could really be in jeopardy with everything focused on Israel. So you've got Israel really nervous about what's happening right now. They're really watching what's going on in Ukraine. There's a lot of Jews in Ukraine, and they've been reporting about some really just terrible, awful things that are happening. And yes, Russia has a precedent in this category. If you think of World War II, as they were pushing everybody back into Germany, especially how they treated the women during that time. And so there's a real fear that I don't know, tradition, if you want to call it that, might continue into Ukraine. But I haven't heard, and I don't want to focus on that kind of garbage, at least in these videos. But things are really scary right now, and with the potential of getting even scarier. And so for us as market participants, that's why it's hard to make decisions. And it's really amazing to me that everybody was an expert on healthcare during the COVID thing. Anyone with a keyboard is an expert. Well, then we drifted into Canada, and everybody's an expert with a keyboard with Canada. Well, now you're seeing a lot of experts with keyboards as it applies to Ukraine. No, we can't do things that way. We need to base things on hardcore fact, whether it goes against what we like or for what we like. We can't twist everything around. We have to see things for what they are. And then how is that going to affect the market? That's my approach. That's why my videos are longer than other videos. I'm not just telling you my opinions. I'm not just telling you, look at this and we're going to go up, and look at that and we're going to go down. I really analyze this stuff, and some people really appreciate that. It also weeds out the people that are just looking for quick answers and want to be told what to do. All right, so let's go back and look at Thursday. We did have a small gap higher at the open. The futures had been positive throughout the night, and so that gave us a positive open, but then we saw some initial selling. Not very much, but we did take us lower. And then after that selling subsided, as the day played out, prices came back up to the unchanged level, which, because we have a down day, that acts as a resistance level. And it looked like things might be turning positive and that we might get some follow through to what we saw on Wednesday. Well, as we got closer to the close, we saw some late day selling and we ended up being down 0.53%. The one thing that is kind of interesting is volume was about average. We have been seeing above average volume earlier in the week. Well, on Thursday, we saw average volume. What we're looking at right now are the technicals, and believe it or not, they're kind of improving. Even with the down day on Thursday, we're still dealing with earnings season. We still have inflation in the background and interest rates, and something kind of interesting is developing there that I'll talk about. And of course, the geopolitical concerns. Okay, so what are some comments that we can make? We're still just out of correction territory. Based on how I calculate things, we're down a little over 9%. But the technicals are improving, and I'll back that up with the charts. We're at about 21 right now as far as the CNN fear gauge. If we go 20 or below, that's more of an extreme negative reading. Prices remain in a range. Russia and Ukraine dominate the news, and as it should right now. And you have a lot of people carrying American or Ukrainian flags, and they're wondering, is there more that we can do? Should the US do something through NATO? Well, there's a lot of uncertainty with that right now. The one thing that I've heard pretty much across the board is we don't want to send troops on the ground into Ukraine. We officially don't have, really, they're not a part of NATO. They're not necessarily an ally. If you studied a lot about Ukraine over the last few years, there's a lot of corruption in that country. So it's like, okay, maybe Ukraine is not as corrupt as Russia is necessarily. And I'm going to have to try to pause this. Sorry about that. I seem to have had a bit of a coughing fit that I could usually edit out if I had access to my other software, and hopefully I won't have to do that again. But you have real sentimental and support for Ukraine right now. And does it just mean that Ukraine is a little less corrupt than Russia? And again, I'm not here to pass any kind of a judgment on things. I do that in other areas of my life, not in these videos. It's the perception and what's being portrayed to the world, and what the world is taking that as far as the general attitude about the whole situation. That's what I'm trying to get at, and what I use to analyze in these videos and in the markets. We did, and I didn't really hear much about this. On Thursday was the second day of Fed Chair Powell's testimony before the Senate. It was day 2 of 2. And he pretty much says the same thing each day. It's the Q&A where there can be some variation, but I didn't really hear much out of that. And I might have missed it, but because I'm focusing on other things too. The big economic report that we had that came out on Thursday, it was weaker than expected. We continue to be overvalued. And again, I want to do some more in-depth videos about that when I can, because we had a down day. This is kind of interesting. The ADX is showing a little bit of weakness. That's interesting, and I'll show you that. But when we look at our bias and our momentum, we are mixed right now. Okay, let's go here. So let's go through the day's session. First, we want to look at sentiment. We are at 21 right now. If we go 20 or below, that's when we're showing more extreme fear. because it had been at 24 after Wednesday. Well, with the down day, it went down to 21. And here is the longer term chart. Okay, then the VIX actually declined. Woohoo, look at that. On a closing basis, it actually fell with a down day. And then if you see here, we closed in about the middle of the daily bar. The Vixen also declined on a closing basis and in the daily bar, and closed not at the bottom, but near the bottom of the daily bar. Another thing that's interesting, and I'll try to point this out too, but this might be pretty good to see. If you were looking at these bars right here, you had no indicators on the chart. We had that real spike down that we came up out of last week. Well, you're starting to see a series of higher highs and higher lows, at least over the last few days. Looking at this from bar to bar, that is a little more positive. Now, we have another down day on Friday and we go back here in the middle and maybe we break through some of the lows. That flies right out of the window. All I can show you right now is what we're seeing at the present time. But even with the down day, the Ulcer Index, which is another fear gauge, it continues to decline. And then here's another longer term look at this. And we can go back and see where it really spiked up during the whole COVID plunge. On Thursday, we had the American Association of Individual Investor report come out, and they had been, in the previous week, they had been extreme negative. Well, with the few up days and sideways action that we've seen, they're a little less negative than they were before. So this is no longer giving us an extreme reading. But if we really hit the skids as far as prices, this could go back down. So just because we're out of this, you can see other times where we climbed out only to come back in. So it doesn't mean that a bottom is necessarily in place. It just means that fear is pretty extreme when it comes to individual investors who tend to make the wrong decisions at the wrong times. Our sectors. Since we had a down day, I sort this according to what was the most negative. Discretionary got hammered, tech continues to get hammered, communication. And then in the positive side, where we're kind of across the board, we did have some positive sectors: materials, energy, healthcare, staples, again, more value plays, and utilities had a pretty good day, and real estate, which has been having some trouble lately, it had a good day on Thursday. This just shows you how things are since the all-time high, with the energy sector doing the best and discretionary doing the worst. As far as inflation, the BDI actually declined a little bit on Thursday, but not really telling us much. This is what I'm really starting to look at. We're just seeing the CRB just skyrocket from one day to the next, and in a very strong uptrend. And if you look at the weekly and monthly videos, it's showing a really solid uptrend as well. As far as our Fed watch, and this is what we're seeing that's a little bit interesting. The keeping interest rates where they are right now, that was off the table. We're in a high inflationary environment. We're seeing economic growth. We're seeing pretty solid GDP. And yet this crept back in yesterday. There was about a 2%, a little over 2% of the market thinks that we might not even change interest rates at all at the upcoming meeting. 94% right now say that we will. We're going to go a quarter to a half. Well, this climbed to 6% from Wednesday to Thursday. And it's interesting that this is even on the table again. Is the bond market seeing something here? They tend to be very experienced, very educated, and pretty smart when it comes to the markets. So if they're seeing something, we want to notice that as well. Then this just gives you the historical perspective where we're seeing the quarter to half continue to be high, and then the half to three quarters is pretty much gone now, with the things staying the same between 0 and a quarter starting to and I wish they used different colors here. Makes it kind of hard to read, but this is just showing an awful lot of uncertainty right now. Technical alerts. Some of these could be positive. Some of these could be negative based on your investor stance or based on your consumer stance. But we started out pretty good with the Canada having a bullish MACD crossover. Tech and industrials had a BPI that crossed above 30. Cyclicals, which is again more of a value play, its BPI crossed above 20. The S&P initially went above 4,400. And then the Nasdaq started off pretty good. It went above 13.8. The Dow went above 34. Materials, another value play, went above 50. Staples, value play, had a bullish MACD crossover. Then we ran into some trouble with the Nasdaq going below 13.7, 13.6, 13.5. And then energy set a 4-year high, which should not be a surprise. Oil set a 4-year high, and the dollar, which has been holding up well. And even though gold isn't on here right now, it was down on the day. But to see the dollar and gold both going up or both going down is kind of strange for that to happen. They usually go in opposite directions and kind of points more to the uncertainty of things. So let's look at the intraday chart. Didn't have much of a real big move from Wednesday to Thursday, but it was slightly positive. But then we saw some selling initially, took us down below the pivot. We found some support even above S1. And then this is where prices started to recuperate and actually went positive for a while. They danced along the unchanged level. But then we saw some late day selling, and even though we closed off the low, we're kind of near the low for the day. So you can see it was very technical, using support as real important levels. Not so much the pivots. We saw those more earlier in the week, but this was more, we're seeing some resistance and possible support that are being provided by moving averages. Then looking at the bar chart, this is what I'm talking about with the series of higher highs and higher lows. That's just an observation. You want to see this over a longer term period of time before you really take notice of it. I just saw this as I was looking at this chart right now. But we're right about at the daily, or excuse me, the monthly pivot. No, daily pivot. That just means that nothing has really been decided. The market is in flux right now. And then down here, you see where volume was just about at average. We're down 9.03% since the all-time high currently. And then growth saw a decline, value saw an increase, which is kind of what we've been seeing lately. Growth has really been in an overall value has been in an overall uptrend, as growth has been in an overall downtrend. Comparing the two indexes, we saw growth really start to decline. If you flip this chart upside down, you would have value actually showing in advance. Then the Nasdaq 100 underperformed the rest of the S&P. As far as our trend, this is what I'm talking about with the ADX flattening out. That's the dark black line, and it's crossing slightly below the moving average. And even with the down day, we saw selling pressure decrease. We didn't see much of an up move in buying power, but we are seeing selling decrease. The overall ADX is picking that up and is declining slightly, but we're still above 30 right now. So that shows that we're in an overall trend, even though if you've gone through this over the last few weeks, it's been anything but a trend. The mass index, this is still on the books. We had a signal generated and we're just kind of waiting to see if anything's going to happen there. The Arun's kind of showing the same thing as the ADX. Even with the down day, we saw a decrease in selling, but we also saw a decrease in buying. Overall, the Arun oscillator really was unchanged from Wednesday to Thursday. No changes in the decision point market scoreboard. As far as breadth, we saw that really strong day on Wednesday, but really not much got picked up, either based on price, a little bit down based on volume. So we continue to be above the moving average based on price. We declined a little bit based on volume with the negative divergence. The AD ratio actually went up a little bit. So, but we're still below the zero line overall. This is a little more encouraging. We're seeing an advance of new highs inside the S&P versus new lows. So there is an uptrend. And then our 10-day moving average is also turning up. Accumulation distribution, even though we declined, it is still above the moving average. Short term, this is what I'm talking about for resistance. We were looking at the exponential moving average being resistance on Wednesday. Well, wouldn't you know that the simple moving average ended up being resistance on Thursday? Our moving average study, a little bit of an advance based on the 20, flat to down on the 50, flat to down on the 200. Then here's our moving average spaghetti chart, which we're trying to get back above this 200-day moving average here. And we've gone a little bit above that, but we have some shorter term moving averages that could be acting as resistance. But right now, this longer term, since we're above, we broke above this, but then we came back down below it. So it's really not providing much support right now. The MACD, whoa, ho, ho, it continues to calculate positive. STO continues to calculate positive based on price and volume. The McClellan oscillator, it has crossed above zero. See where things are turning a little more positive even with a down day? And of course, the Stochk RSI is showing us extreme positive. The Williams percent R is not quite as excited, but it's above 50 and rising. The force index did decline, but remains green. And then I showed this after Wednesday where we shot up pretty fast. We're coming down off an extreme positive reading with the rate of change based on 5 periods. This will probably change once we get further away from this real down spike that we saw. Intermediate term, 50-period moving averages are not really helping us at all right now. The PMO is trying to cross positive, both based on price and volume, improving, but still negative. A PMO study, those that are rising declined a little bit, but those that are giving buy signals advanced a little bit, and those that are above zero are flat to slightly down. So that's where I'm getting this mixed idea from. BPI, though, continues to show some improvement. And then here's a longer term view of this chart. So that's encouraging to see point and figure buy signals being generated inside the S&P, even with a down day. We're still kind of bouncing around at the bottom of the rainbow with the top of the rainbow rolling over. Stochastics, short-term positive, intermediate-term positive, and longer-term continue to be positive. With the turn up in the McClellan oscillator, we saw, and this is the cool thing about this indicator that I use that base it on volume, when we come to major bottoms, a lot of times this will start to turn up based on volume before it turns up based on price. I'm not saying that's what will happen here. Unless we see some gargantuan up day, then I'll be able to go back and say, yeah, look at this. It was telling us what was happening. It's just showing us right now that volume is a little bit more positive than price right now, but we have to follow price. We're seeing a mix as far as our momentum oscillators. Some of these are crossing positive, some of them are negative, some of them are more trying to cross positive after being negative. Vortex, not really doing too much, was flat based on the selling pressure, but advanced a little bit based on the buying pressure. And I keep saying I'm not going to include this anymore, but because the CCI crossed above zero, I wanted to include that again. It actually advanced even with a down day. RSI, because we did have a down day, it declined, but not very much, but it is below 50. Our trading systems, we're back to neutral with the elder sister system. The elder sister, that's kind of weird. Elder system, where it had been positive, but the SAR continues to be positive with the dots below current prices. Our different charts, the Heiken Ashi, this is showing things to look a little bit more positive. The Kegi did not see a change, but it switched back to black, which is more positive. The Renko did redraw, and now this is looking more negative, where we saw a clear box kind of in the middle yesterday. The 3-line break, this is also trying to pick up some more positive price movement. Equi volume, because of the down day, we have the red candle, not really telling us much, but the ease of movement continues to advance on the 14-period calculation. Point and figure, no change. The last signal generated was the pole reversal. These zeros going down is the pole. If we're reversing, we need to see more X's here, but as long as we go sideways, we're not going to see that. The retracements, we've been bouncing between the 38.2 and the 50% retracement. We're kind of in about the middle right now. Long-term charts, we are still below the long-term moving average based on the arithmetic scale as well as the logarithmic scale. So this shows that the long-term trend could be weakening. The special K continues to decline on both of the charts that I show. As far as the broad market, the S&P, again, series of higher highs and higher lows. Just an observation, where with the mid caps, we're back in the range. Small caps, we are still in the range. FANG stocks, they were down 2 1/3%, and not really giving a lot of leadership right now, unless it's to the downside. Kathy did not have a good day. ARK declined 6 1/3% overall. The Dow, we had been right below the pivot before. Well, we tried to break above that and we remain below the pivot point currently. Small caps above the pivot, but we're still dealing with overhead resistance with moving averages. Mid caps, kind of the same thing. We're still above the pivot. Nasdaq, we were slightly above the pivot on Wednesday, while we dropped slightly below the pivot on Thursday. Same thing with the Nasdaq 100 with the recent death cross. The Vixen, it closed near the bottom, but we didn't see a real spike in fear with the Nasdaq 100 currently. NYSE, we're below the pivot where we had been slightly above the pivot. The S&P 100 continues to underperform the rest of the S&P 500. The Wilshire, we were above the pivot. We're right on the pivot right now. And that's a pretty broad index, and to have it right in the mid-range there is not necessarily surprising. We're seeing pretty much across the board declines internationally when you calculate this based on the KST. And our all stocks ETF that we follow is just kind of bouncing around within the same range that the S&P and all the other indexes are. Broad markets, the dollar continues to really hang in there. It's threatening to get back up to 98. And the weekly chart is also looking pretty strong right now. Oil, man, it just shot right up, but ended up closing down around the 107, almost to 108 level. And some of that can be feeding not only into the geopolitical events, but what's going on in the Iran talks as well. Gold remains above 1900, even though it saw a 0.71% decline on Thursday. And here is the gold ETF, which also had a bit of an advance. That's why it's like, okay, if I look at the futures contract, sometimes it contradicts the ETF itself, where it's showing that we're right at about 180. Silver was actually down a bit. And this could be called an inside day because it didn't exceed the previous day's high or low, but continues to be above the moving averages. Bitcoin's kind of floundering around the lower 40s now. And people are just, even in this market, people are, I mean, you go into some of their chat rooms and of course, everybody's a genius, but when it comes to the people that really know what's going on, there's some real uncertainty right now. So we're not seeing some big moves, seeing a lot of sideways action overall. As far as bonds, we're still declining now with our credit spread here, the 10 and the 2-year. And we're trying to figure out, are we seeing a real tightening monetary policy? Well, that's not really happening yet, especially if they may not even raise interest rates, or if they're only going to raise them 0.25%. So is this telling us that the economy is weakening and we could be going into a recession? We're trying to look at both scenarios at the same time because it's telling us a story, but we're not really quite sure what that story is right now. And then as far as the 10-year yield, where we had been having some support, we broke down below that. Well, we came back up and we're back around the 50% retracement level right now. We saw kind of a flat move as far as interest rates with the 30, 10, and 5, where the 2-year interest rate did climb and the 3-month did climb. Internationally, after having dropped to negative, the German interest rate, well, it doubled in value since Wednesday. It had a 0.01% return on Wednesday, only to have a 0.02 return after Thursday. So you could say, wow, it's 100% gain, but yeah, okay, that's supposed to be a joke there, folks. Bonds were up slightly, but continued to be in an overall downtrend based on price. Corporate bonds rebounded slightly, and then our interest rates are right around 3.25, 3.2 to 3.25. This doesn't update every day, so it's kind of hard for me to follow this on a daily basis. And this just gives you a longer term view of the yield on corporate bonds. Our relative studies, we saw a decline in, forgive me, this actually advanced slightly, the ratio between gold and the S&P 500, but it's kind of jumbled together right now, and we are starting to see a potential cross. But we've seen that before, only to have things turn around and go back down. But is this time a little bit different than these other times? Then the energy relative study, where we're just seeing a real breakout compared to the SPY right now. So what are we looking for on Friday? The S&P is just slightly out of correction territory. We have 0.75% to 1% downward move, and we're back in there as far as how I calculate it. We are in a short-term range. We're still dealing with earnings. The battle is continuing between growth and value. The big report is coming out Friday at 8:30 a.m. That's when we get the unemployment report and all the slew of information that comes with that. We're also paying attention to what's going on between Russia and Ukraine, as well as the Iranian talks that I talked about earlier in the video. So where am I right now? I am mixed. The S&P is mixed and range bound. Short and intermediate term is mixed. The long-term bias remains positive, but showing weakness. The longer we stay under that long-term moving average, the more the long-term uptrend could be fading. So thank you very much. I hope you have a wonderful Friday. I will prepare the next video after Friday's close, and I will also be putting out a weekly video over the weekend.